Black homeowners aren't losing their houses to the mortgage anymore. They're losing them to the insurance bill. Not a foreclosure notice, not a layoff, not a market crash. A renewal letter. These are the 10 states where that letter does the most damage. And look, I'm not ranking them by what insurance costs, because everybody does that. Same house, same credit score, same coverage. Move it into a black zip code and the price jumps 16%, about $500 a year. So I'm counting two things: that gap and what it already took in that state. The coverage, the equity, or the house. Hit subscribe, and we'll start at the bottom. Number 10. Florida. You know the porch, you know the envelope. You open it standing up, and finish reading it sitting down. Florida sells itself as the last affordable retirement in America. No state income tax, warm in February, a yard for what a condo costs up north. Black families have been moving down there on that math for 30 years. And the bill is the worst bill in the country. A typical Florida homeowner pays about $8,292 a year just to keep the house covered. That's not insurance. That's rent, on the possibility of a bad afternoon. Florida also led every state in the country in non-renewals in 2023, at 299%, according to the Senate Budget Committee. That's not a rate increase. That's a letter telling you to go be somebody else's problem. So why is Florida sitting at the bottom of this list? And I hear you on the non-renewals. That 2.99% is the whole state, not Black Florida. That's the point. Because when the Consumer Federation of America priced the same house in a black zip code and a white one, Florida came back at 13%, under the national average of 16%. Florida's Hispanic gap is 58%, the biggest in America, $5,014 a year, and the black gap is the mildest thing you'll hear today. That study isn't quoting your bill, by the way. It prices one identical house in every zip code in America, so it measures the difference, not the total. Some of your bill is about your house, some of it is about your block. In Florida, the block part is real, it's just small, and it's buried under the biggest bill in the country. Florida's own insurance regulator says that's the whole story everywhere, that this is about flood zones and wind and rebuild costs, not about who lives there. Fine. Hold that thought. Let's be honest about what Florida actually is. It isn't easier on black homeowners. It's brutal to everybody at once. Stormwater doesn't slow down at the edge of Liberty City, or Opelika, or Miami Gardens to see who's inside. And neither does the invoice. Florida lands at number 10 because the damage is shared and the gap is small. It's charging black families a fortune. It just isn't charging them a fortune for being black. That's everybody's bill. Number 9. Illinois. Ask around Chatham or Auburn Gresham, and you'll hear the same sentence out of 3 different mouths. The house is paid for, and I still can't afford to keep it. A lot of them will tell you insurance is now the biggest bill they have that isn't food. Chicago is supposed to be the affordable big city. Black homeowners on the South Side can still buy a brick 2-flat for less than a studio costs in Brooklyn, and families have been stacking equity there since the Great Migration got off the train. Then the Federal Reserve Bank of Chicago measured it. Illinois premiums climbed 32% between 2018 and 2022, against a national average closer to 25%. But the number that tells on the system is the next one. Households in the lowest income zip codes are spending about 2% of what they earn on premiums. The highest earners spend 1.1%. Same policy, and it sits on a South Shore paycheck about as light as a refrigerator. Now let's be fair. Illinois doesn't have the widest gap on this list. In raw dollars, the North Shore pays more than the South Side does, and a carrier will hand you that fact like it settles something. It doesn't. 2% against 1.1% means the identical policy takes almost twice as much of a South Shore paycheck as it takes from somebody up on the North Shore, for a house worth a fraction as much. That's not a discount. That's a bigger bite out of a smaller plate. A retired bus driver in South Shore covers that premium out of a fixed check that doesn't move when the renewal does. Nobody in Chatham is losing the house this month. They're losing the piece of the check that was supposed to turn into somebody's down payment in 2041. That's number 9. Number 8, Louisiana. Louisiana finally caught a break this year, which is what makes it the strangest entry on the list. For the first time since the 2020 and 2021 storms, homeowners down there are seeing rate decreases next to the increases. Nearly 24 new carriers got licensed. Louisiana Citizens, the insurer of last resort, is down to roughly 114,000 policies from a peak of 140,000 in 2022. So the market is healing, genuinely. Now here's everything that healing doesn't touch. A lot of black families in Louisiana own land the way it was actually handed to them. Grandmother passed, the house went to 6 children, nobody filed anything, and 40 years later, 11 cousins own a shotgun double in the lower 9th Ward. Heirs property. Public Citizen calls it one of the leading drivers of black land loss in this country. A carrier can't price a house that 11 people own. It doesn't turn you down, it just can't find you. And that 16% gap, the $500 a year everybody else on this list is arguing about, never reaches you. You have to get quoted before you can get overcharged. The house is standing, the family's in it, the taxes get paid every year, and the property is uninsurable to a system that needs one name on one line. After Katrina, families in Pontchartrain Park and Gentilly, sitting on land theirs since the 50s, watched payouts and federal aid go to neighbors with a clean deed, while they held a title nobody could untangle. That's the block tax, with the paperwork removed. Louisiana will tell you the market's cheaper this year. Then ask Louisiana to cover that shotgun double, and Louisiana asks a question back. Which one of the 11 of you owns it? Louisiana comes in at number 8 because the gap is closing, and the damage already happened. You can't get priced out of a policy you were never eligible to buy. Number 7, Missouri. North St. Louis did everything Black America keeps telling itself to do. Stay, buy, hold the block for 3 generations. So why is it the clearest proof on this whole list that doing it right wasn't enough? St. Louis is the city we're always told to hold on to. Cheap, historic, ours. The Ville raised Chuck Berry. You can still buy a brick house in Fountain Park or Wells Goodfellow for less than a used truck, and generations bought exactly that, because staying and building was the argument. Then, in May 2025, an EF3 tornado came through and audited the coverage in one afternoon. St. Louis Public Radio reported data cited by the city's IACP branch showing nearly 70% of property owners in parts of the district were uninsured or underinsured. 70%. And when the map of uninsured residents got laid over the city's 1935 redlining map, the two lined up. 90 years, same lines. Imagine owning a house free and clear for 30 years, doing everything right, and finding out after the roof leaves that the policy covers about a third of what a new one costs. Or worse, that you let it go in 2019 when the premium jumped again because the mortgage was gone and nobody was making you carry it. Homeowners insurance isn't required by law anywhere in America. Your lender requires it. Pay the house off, and the only thing standing between your family and zero is whether you can still afford the premium every year for the rest of your life. The branch has asked the Missouri Department of Commerce and Insurance for a market conduct examination, zip code by zip code. Missouri lands at number 7 because the gap is small and the damage is total, in one district of one city. The tornado didn't create that number, it just published it. Number 6. Georgia. Somebody's already typing. Atlanta? Really? Atlanta is the promised land. Atlanta is where we went. That's exactly why it's on here. Georgia spent 20 years selling Black America the one thing nowhere else would sell us. A house, a yard, a black mayor, neighbors who look like you. Millions took the deal. South Fulton, Stonecrest, Douglasville, suburbs that flipped inside one generation of closings. Now the bill for that deal is climbing faster than almost anywhere. Georgia premiums rose 8.6% in 2025, while the national average moved 5.6%, and since 2021, they're up about 39.7%. Insurify projects another 10% for 2026, which drops Georgia into a group of 4, with California, Nebraska, and New Mexico, and the other 3 all come with a famous disaster attached to the name. Georgia's insurance market right now is about as steady as a folding chair at a family reunion. Metro Atlanta is averaging about $3,420 a year. That's a car note that arrives once, annually, with no car. Now let's be fair, Georgia's gap is not extreme. And Georgia isn't turning on black homeowners. That's the point. Nobody has to. You can price a family out of a house their parents drove 11 hours from Detroit to buy, without ever once saying who they are. And that math hits a first-time owner in Stonecrest differently than anybody else here. Those suburbs got bought recently, on new mortgages, so the lender requires the policy, and escrow collects it, whether the family likes the number or not. No dropping it, no going bare. Another 10% on $3,420 is about $342 a year, landing inside a payment that was already tight, and not one thing changed about the house. This is the largest concentration of new black homeowners in America, and it's getting one of the fastest rising bills. Georgia comes in at number 6 because the gap is ordinary and the exposure is enormous. Nobody there can opt out. That's 5 down. The back 5 are where this stops being about money. If the breakdown's been worth your time so far, tap like, hit subscribe, and turn the bell on so the next one finds you. Deeper research every week on the places nobody prices honestly. All right, back to the count. Number 5. New York. Homeowners out in Southeast Queens have been saying the same thing for 3 years. The taxes I understand. The water bill I understand. The insurance I can't explain to anybody. Here's what nobody expects about New York. New York is cheap. The average homeowner's premium in the state runs about $1,387 a year, below the national average, roughly a sixth of what Florida charges. You can insure a house in New York for less than a lot of New Yorkers spend on parking. On paper, New York is one of the easiest states in America to insure a house in. And New York is still one of the 5 worst states in the country for the black premium gap. Same Consumer Federation of America study, every residential zip code, one identical house priced everywhere. It named 5 states. It put a dollar figure on 2, and you'll hear both before the end. Sit with that a second. It isn't the weather, because New York isn't priced like a hurricane state. It isn't the price level, because the price level is low. It isn't the houses, because the study used the same house on purpose. It's the line on the map. St. Albans, Cambria Heights, Laurelton. Those are the blocks where black New York built real wealth, single-family homes with driveways, transit workers and nurses who bought in the 60s and never left. Bed-Stuy, same story. Canarsie, same story. And that's what the study is describing when it says the surcharge lives in the zip code. A house in Cambria Heights and a house across the county line, same coverage, same credit score, same replacement value, different number at the bottom. That matters more in New York than almost anywhere, because those houses are the whole estate. No second property, no portfolio, no trust, just a 3-bedroom on a corner lot bought on a city salary in 1968, with every dollar the family has inside those walls. Nobody in Queens is getting run out this year. They're just paying a fee with no name, forever, on the cheapest average premium on this list. New York lands at number 5 because the gap is severe and the damage is invisible. Number 4. Massachusetts. Massachusetts will explain racism to you. It'll cite the study, fund the commission, Name the plaza. It's also one of the 5 worst states in America for what black homeowners pay to insure a house. Start with the good news, because Massachusetts has some. It's the one state here whose average bill is actually going down. Homeowners' rates there are projected to land flat to slightly down in 2026, somewhere between 0 and -2%, while the country goes up about 4%. Massachusetts is the rare American state where the average bill is falling. And an average is a very comfortable place for a state to stand. Now here's where the map starts talking. The Consumer Federation of America put Massachusetts in the national top 5 for the black premium gap. The average came down. The gap did not. Watch what that does over 20 years. Roxbury isn't a majority black neighborhood anymore. Its black population down roughly 10 percentage points after 2010. Dorchester's dropped about 13% over the decade. Mattapan's about 5%. Black residents were 21% of Boston in 2022 and got 8% of the new mortgages. Nobody in Boston calls that displacement. They call it a hot market. They call it inventory. They call it a neighborhood turning around. And everybody knows which way it's turning and who isn't expected to turn with it. Massachusetts knows every bit of this. It'll tell you it's aware, that it's been studied, that there's a working group on it. So the families go to Brockton. They go to Randolph. Every few years the commute gets longer, and the word for it gets nicer, and the surcharge follows them out there, because it was never scoring the family in the first place. This is a state that fixed the average and left the map exactly where it was. Number 4. Number 3. New Jersey. Look across the river for a second, because the state coming up next gets assumed into the same story as this one. It isn't. Over there, the problem is the size of the number. New Jersey's problem is that it already got caught doing this once. New Jersey sells itself as the state that got diversity right. Most multicultural state in the country, that's the line they run. Newark's South Ward, East Orange, Irvington, Willingboro. Black homeownership there is old, deep, and suburban, which is rarer than it should be. Now the numbers. The Federal Reserve Bank of Philadelphia found New Jersey homeowners' premiums up 26.1% between December 2021 and June 2025, after inflation. So that's real money, and not the dollar shrinking. And the Consumer Federation of America puts New Jersey in the national top 5 for the black premium gap. But here's what separates New Jersey from everything else on this list. Back in 2021, the same organization measured New Jersey auto insurance and found majority black zip codes charged 49.5% more than majority white ones. That held for drivers with excellent credit. It held for drivers with fair credit. It held for drivers with terrible credit. Different product, different year, same map. 2 bills, priced off 1 filing cabinet. That's what should worry a homeowner in the South Ward. The zip code didn't wander into a pricing model by accident. It's load-bearing. Your address is doing more work in that quote than your credit, your roof, and your claims history put together. This is the one state where you can watch the identical surcharge surface twice, on 2 different bills, 5 years apart, and come back the same shape. New Jersey comes in at number 3, because the gap is top 5 and the damage is structural. Number 2, Pennsylvania. You're standing in a kitchen in North Philadelphia, in a row house your family has owned since 1974, and the renewal is face up on the table. Same house, same block, same roof you paid to fix last spring. The number went up again, and there's no event attached to it. Nothing burned. Nobody filed anything. Nothing happened at all, except another year. Philadelphia is the great black homeownership city. Not the richest, not the loudest. The one where a working family could actually own the thing they slept in, generation after generation, in North Philly, in West Philly, out in Yeadon and Lansdowne, up in Wilkinsburg. Here's the figure. In Pennsylvania, Homeowners in predominantly black neighborhoods are charged 57% more than homeowners in white ones, about $1,048 a year, same coverage, same kind of house. That's the Consumer Federation of America, and it's the second widest gap in America, and it's landing on top of the fastest real increase in the region. The Philadelphia Fed measured Pennsylvania premiums up 28.9% between 2021 and 2025 after inflation, outrunning what homes there gained in value. The house gained a little value. The bill to protect it gained a whole career. Now let's talk about what $1,000 a year actually is. It's the water heater, it's the school clothes, and the property tax bill in the same month. It's most of a semester at community college. It's the difference between a paid-off house being something you leave your children and a paid-off house being something your children have to have a meeting about. That's a decision somebody made a long time ago, and nobody ever went back and unmade. Pennsylvania comes in at number 2 because the gap is enormous and measured, and the damage compounds every year it stands. 57% isn't a market outcome. Number 1. Michigan. Michigan is the answer, and it's the one nobody's going to argue with. Detroit built the black middle class in this country, not as a symbol, as an address. Rosedale Park, Russell Woods, the East Side, Highland Park, Union money, brick houses, deeds that stayed in the family. If you're black in America, there's a real chance the first house anybody in your line ever owned outright was in that state. Here's the figure, and it isn't close. In Michigan, homeowners in predominantly black neighborhoods are charged 74% more for the same coverage than homeowners in white ones. An average of $1,768 a year, $1,700 for nothing extra. That's the Consumer Federation of America. Same study, same hypothetical house, same credit score, same $350,000 replacement value. It's the widest measured gap in the United States. Michigan doesn't turn anybody down. Michigan just says, that'll be 74% more, and waits to see who can keep paying it. So what does a city do when the bill runs that far past what the house is worth? It stops paying it. The University of Michigan surveyed Detroit homeowners and found 26% carry no property insurance at all. More than double the national estimate of about 12%. The same researchers say the real figure could run as high as 41%. And when researchers asked why, the answer wasn't suspicion, and it wasn't paperwork. It was cost. A Detroit homeowner who still carries it pays about $2,327 a year against $1,422 for the average homeowner in the rest of Michigan. And here's the problem with putting Michigan at number 1. It has the worst gap in America, and a quarter of the people it's aimed at aren't in the market anymore. You can't be overcharged for a policy you canceled. So is Michigan the worst, or did it just finish first? It finished first. The gap didn't shrink in Detroit. The customers did. It was never really a premium. A paid-off house was supposed to be the one thing nobody could take back. It was the whole argument for staying. It was what the overtime was for. And a quarter of the city that made that argument to the rest of us is one kitchen fire from nothing in a house they already own. The deed is real. The coverage is optional. Michigan takes number 1 because it maxes out both halves of the ranking at once. The widest gap in the country, and the deepest collapse in coverage anybody has documented. Every other state on this list is in the middle of that process. Michigan already reached the end of it. So that's the 10, and the whole thing fits in one line. The insurance crisis everybody's covering is a weather story. The one hitting black homeowners is a map story, and the two maps don't match. The block tax never shows up as a line on a statement. It shows up 30 years later in who still has the house and who doesn't. Now tell me where I got it wrong. Does Michigan deserve number 1 when Detroit already quit paying? Or does Pennsylvania take it for charging 57% to people still in the market? Drop your ranking below and say your city first, because somebody from there is reading. Like it, subscribe, and I'll keep doing the homework nobody else wants to do. Because a deed's supposed to mean the same thing on every block it gets filed on.